Okay, what's up, people? Welcome back to another stream. Hope everyone is doing well. Good to be back. If you guys are enjoying the content, finding it useful, please be sure to drop a like, share it with your friends, subscribe to the channel. Does really help out. Of course, hit the bell as well so you don't miss out on any streams or uploads in the future. But as always, we've got a bunch of markets to get through. I'll go through some of my top picks, what I'm focusing on this week, any markets I'm currently trading, what I'm looking to see if I can find and trade on as well this week. And of course, if there's any preferences with markets we take a look at, also any time frames as well, let me know. We can definitely dive into them as well. But any markets you're looking at, feel free to drop it in the chat. We'll be happy to discuss and see what you guys are looking at and what you guys are trading. But if you didn't see the weekly analysis from the weekend, we spoke a lot about the USD pairs, about the indices as well, about metals too. I did say going into this week, we're looking for a bit of a bounce on some of the USD pairs, particularly Euro USD and Pound USD, and Aussie dollar as well. I was already short dollar CHF from last week, which we can take a look at as well. But looking for a bit of a bounce. We were very, very bearish for last week's price action. You can see this is the weekly candle for euro dollar. So very, very bearish. If you flick over to pound USD, very bearish as well. But we must not get carried away, especially in pound USD's case, because you can see we just left behind a big wick there. So even though most of the week was looking pretty bearish, by Friday we pull back. So coming into the week, we're looking for a bit of a bounce, especially when the market is chopping around and you do see big candles. The big takeaway is not to get oversold or overconfident on that momentum, because the conditions don't favor that. You can see in these conditions where markets mean reverting, momentum is nothing to be overly confident about, because most of the time momentum is going to die out. Of course, breakouts will eventually happen, and when they do, we'll have a change in environment and we'll focus on different opportunities. But especially when we're in the middle of the range like we are at the moment for pounds, this rejection of that key low, looking for a brief bounce, was the buyers coming into this week. And it's kind of already played out as well. So I wouldn't be looking to take any buys now for pound. We've already seen that push to the upside. I did get into some shorts for Aussie dollar. I probably should have taken pound USD or even euro instead. My position is not showing there. I'm short from this candle close. My stop 0.72. So yeah, I did get short on Aussie dollar. Probably should have taken pound USD because Aussie is naturally a little bit stronger. But the bias still stands, and it is more of an aggressive trade as well. I do have a short position on dollar CHF, which is kind of the more higher probability position. So I'm seeing if that plays out. If it doesn't, hopefully Aussie dollar kind of hedges that position. But essentially, we have a bullish market for Aussie dollar, which has been running out of steam for the past few weeks. You can see candle sizes are getting small. The bodies are becoming less less confident. We're seeing more wicks. The efficiency of the closes becoming less confident, and you can see roughly around 0.71 is where we're finding resistance. So as we spiked up this week, very, very bullish. Aussie is quite strong, but we're coming back into the area which for the past 4 or 5 weeks we're failing to close above. So the bet is essentially I'm looking for resistance to be found. Now I'm not looking to call the top. I'm not looking to say, okay, Aussie dollar is naturally going to melt here. It could do, but that's not the trade. All I'm looking to do is see if we can maintain resistance here and probably pull back halfway of that candle. Best case, maybe pushed back towards support there, but I'll be taking more profit as we go along. So I'm going to see what we can do there for Aussie dollar. I've only just entered the trade, so it's still very early doors. But essentially, I'm looking to see if we can hold this high. This is kind of like a anticlimactic move before we do see some downside. Hey, what's up, Alex? Welcome to the stream. Hope you're doing good. Welcome. Of course, any markets you're looking at, feel free to share. But yeah, Aussie dollar, you can see what happened with the last high we created. You can see price had a rather aggressive move, took out the high, and then we kind of roll over. I'm looking to see if we can get that bet again. 1, 2, 3, and then the rollover as well. So we'll see how that plays out. Pound USD's kind of already done that move. So yeah, probably should have chosen pound, but hindsight is a wonderful thing. In terms of dollar CHF, which I spoke about on the weekly analysis, this one I got short last week. Last week, and I was holding this over the weekend. Basically, just looking to see if we can hold resistance here. You can see critical level, market failed to break through, came back underneath. That's basically the sign that says, okay, bears are still in control of the market. We have a very, very considerable level of price support turn resistance. And for me, that was a very strong rejection of that same area. Now, I'm treating this as a ranging market. I know overall the market is bearish. So naturally, I want to be a seller. But we've been pretty flat over the past few weeks. If I go to the weekly chart, you can see that kind of summarized quite well. You can see it's literally just been bearish candle, bullish candle, bearish candle, bullish candle. And we've just been oscillating. So the trade idea is essentially we've rejected this area, looking for a push roughly to the midpoint, and then I'll take 50% there, and then I'll hold the rest with stops trail to break even to see if we can push to lows and maybe further as well. After all, there is a trend we could potentially take advantage of here. So that would be best case scenario. So yeah, dollar CHF holding from last week, Aussie dollar taking a little bit of a stab at that one this week. And I was actually looking at shorting some of the indices, but I decided just to stick with FX just because if I'm going to short an indice, I need to have my confluence stacked to the roof. My default position is always looking for longs because, of course, that's the condition of the market. But only under strict circumstances will I take a short. So I was kind of just making sure I don't force anything, even though looking at price action, excuse me, my voice is being a bit croaky. But yeah, in terms of the price action, shorts do make sense. It's just if I was to take a short, it would only be for a very short-term position, because you can see last week's candle, which was the key candle that kind of opened up the door to shorts. You can see for the past maybe 10 weeks, it's just been consistent wicks in this zone, consistent wicks, wicks after wicks. Market is failing to close in this area. And then last week's candle, we actually see a sustained close there. The market provided a nice wick to the upside and actually closed pretty confidently to the downside in this area. Of course, this week was a very aggressive gap. What would have been nice is if we didn't have such an aggressive gap, maybe even gapped higher, and then shorted maybe Monday, Tuesday, and then Wednesday we had a bit of a push down. That would have been a nice sequence. The fact that the market already dumped all the way down here, I don't really like taking a sell now, because yes, I think we can still find resistance here, but I wouldn't bet on this candle now flipping bearish. Of course, anything can happen, but that would be a very dramatic sell. And that's not something which I would want to predict, so to speak. It's more something that could happen, but I'm not gonna necessarily bet on that. So what would be nice is a gap up and then a sell, but we kind of already had that gap coming from the weekend, so that really did put me off the position. Same thing for Nasdaq as well, US30 as well. In terms of the Nasdaq's in a clean range, so I don't see any opportunity with this one apart from the buy. Actually, there was actually a nice buy. I missed that. Very, very nice buy as we tapped into the low of the range. Again, when the indices are ranging and they've got like a very nice predefined range and we're testing the lower limits of that range, typically that's a really good place for a buy. Not so to speak that, okay, that's going to be the bottom and you're going to catch the next big move. Could be, but naturally, just because of how the market moves, the support is just going to be very, very strong. And as long as there's signs of rejection, it's normally a safe bet. Of course, not 100% success, but a probability-based bet, which at the end of the day is all what trading is. So a really nice reaction there. Again, it gapped to the downside as the week opened. So if you weren't kind of ready focusing on the market in the first few hours of the trading week, the idea is kind of gone already, because now we're back in the range, and this is now back to a no trade zone for me. I would not touch this even on the lower time frames. I would stay away. What's up, LFTJ? Welcome to the stream. Hope you're doing good, my man. So I would stay away there from Nasdaq. Absolutely in no man's land. In terms of US30, I said I did like this going over the weekend from a short bias. You can see momentum's picked up very well. But again, I didn't like that gap to the downside there. You can see a very aggressive close on the weekly chart. Normally, I like to sell kind of anywhere within this area on the week, on the week's body. So drop into the 4-hour chart. We discussed the pullback into this zone is a nice place for a short. It has reacted pretty well. Do I bet on price now for filling that move? No, not really. It's just a bit too aggressive. I think we can see a dip, but I would be worried as we come back into here. My default bias is always that we could see that bullish trend kick in. And especially if I go to the weekly chart, we've pretty much come into an area of demand now. So this is naturally an area where more buyers should be jumping into the market. So I don't really feel comfortable selling into that. If price hasn't tested that area, yes, because I would expect it to get there. But now that we have tested that area well, I don't want to be selling after that reaction, if that makes sense. Because if we have a very strong area in the market here, and let's say price is trading up here, I don't mind selling there because there's a natural inclination for the market to go and test that area for a bounce potentially. If the market is already bounced, I don't want to be taking the short now because we've already seen buyers enter the market. They could really take us higher, especially in a market that does naturally trend to the upside and is still in an uptrend, in my opinion. So yeah, US30, I think the shorts are a little bit more awkward. Maybe some short-term plays intraday could make sense, but I would not be looking to swing that at all there. What would be nice now is if we can start to maybe go and break structure and then start looking at some buys, but we're probably still a week or two away from that. So yeah, indices are interesting. I was really liking gold as well coming into the week. It was looking interesting. LFTJ waiting for a retest of gold 5K on an hour. Okay, we can absolutely take a look at that. So yeah, gold was looking interesting last week. I didn't like the price action coming into this week because of course we had that massive bearish drop there. Just made things a bit awkward. In terms of the market structure, it's still pointing up, so I'm still very much bullish. It's not looking as clean as it was a couple of weeks ago before we had this dramatic sell. But again, as I was mentioning the weekly analysis, sometimes just dropping to the higher time frame, just to give you some context, really does help in terms of bias, because you can look at this chart and just say, okay, this is still absolutely very, very bullish. Yes, there's some signs that were slowing down, but it's a sign that was slowing down, not necessarily reversing. Two different things. So I still definitely want to be a buyer for gold. And I would not be surprised if that wick high gets taken out. It looks like we're still maintaining these higher lows. I could see over the next couple, 2, 3, 4 weeks, us just drifting high and taking out that high. So I still want to be a buyer here for gold. Absolutely. It's just not as clean as it could have been on the lower time frames with that dramatic kind of sell there. So as I said, coming into the week, I kind of want to see price break out of this range with some force. It looks like we're kind of eyeing that up right now. We've had a bit of a surge of momentum, slight correction here. Maybe if momentum picks up again, that becomes interesting. And then I don't mind some pullbacks afterwards. This will be the first target back to that recent high. And of course, you got the all-time highs there as well. So I'm liking gold. It's picking up momentum. It's not there yet for me to trade. LFTG said you're looking for a test of 5K. Naturally, that's a smart place for a buy. I personally wouldn't buy from that to try and expect a big continuation. That would be a smart place for a buy just because it's a healthy level of support. Market's likely to hold. We're still putting in higher lows. That would be a likely place for us to kind of bounce from. Whether it turns into a huge continuation or just a bounce for a couple of days, that's a different bet. But in terms of location of entry, I absolutely agree. So yeah, bias is bullish. I don't want to be a seller. You can see this is where support is finding in the higher time frames. We drop to the daily chart as well. You can see a bunch of wicks there. There's a good chance if we do push into here, we're likely to hold, provided we see some rejection, of course. But yeah, the trade I'm after is if momentum picks up, because especially when we're in this bull cycle, momentum is such a key indicator. Because you think back to this cycle here, what was the key characteristic of this price action? it's not necessarily the higher highs and higher lows. It's just pure bullish momentum. As long as that's present, you naturally got that chance of continuation. It's very, very high. And especially if you're looking at trading stops and just trying to maximize wins, you can get some monster trade in those conditions. When things get choppy here, you can see we don't have that momentum anymore. So now the opportunities become a bit more tactical. You have to be a bit more switched on, a bit more patient for entries. Here, literally just buying the breakouts. You're making healthy gains. Here, you have to be a bit more tactical. Buying breakouts, not as profitable in this regime. So looking for that momentum to pick up. Doesn't have to look like this, of course. That would be the best of conditions, but at least if I can see some signs that we're breaking through highs again and we're just maintaining these higher lows, yeah, that's the signal I want to see. And then I'll be looking for a pushback to highs and etc. Other metals not as convincing. Silver for me just absolutely all over the place. This is the analysis I was talking about over the weekend in terms of, okay, we're just basically back inside the range. There's your high, there's your low, there's your fake out from last week or the week before. And we're just kind of fluctuating. So there's no sign here that buyers are back in control at all. You could argue there's some natural higher lows coming to the market, but there's no persistence in that. There's no really higher highs coming into play either. So overall, very, very neutral bias now for silver. We were in that bull cycle over here quite clearly, quite evidently, just looking at the price action through a naked eye. Here, you can see we're in a different phase. So you can't use the same strategy that you were using here in this situation, or at least effectively. The results will be very, very different. So you're going to have to be a bit more patient. And in this case, you're looking to try and short near the highs here or catch breakouts if that's the case. Or, of course, buy near the lows or, of course, catch breakouts lower. In here, for me, would be no man's land or maybe some very short-term trades intraday if you're looking kind of like on maybe 15 5-minute charts. You might be able to get away with some short-term plays for that session or maybe even for the day. But nothing longer than that because it's a guessing game, really. Again, one of the easiest way to create a bias, not create a bias, but find a bias in the market is to look for a market that has a clear one-sided participant domination. So are the buyers in control? Are the sellers in control? If you can't really decide which party is in control, then it's probably neutral. It's probably just a ranging market or maybe slightly trending, but not clear. If you can see that one participant is dominating like here, of course, this is an extreme case, but you can clearly see buyers dominating here. Then, of course, it makes the trading bias and the trading decisions a little bit easier. Well, actually, very easier, especially in these conditions. But yeah, here it's 50-50. So yeah, silver, I'm just staying away. Platinum's been awkward as well. I don't really trade platinum much, to be honest. Maybe if momentum picks up, I'll be interested. But yeah, gold's on the cusp. It can develop. I just need to see that momentum pick up. Big thanks. Yes, we can take a look at oil and BTC. Absolutely. Samuel. Yes, we can take a look at euro dollar as well. I haven't actually gone through euro dollar. I went through pound USD, but not euro. So absolutely, you can take a look. Seems it's turned bearish. Sure, we can take a look. Hey, what's up, Christian? Hope you're doing good. Welcome to the stream. Hope you're well. Take on UJ. Absolutely, you can take a look as well. I want to sell through the yen basket. Okay, we can have a look. Thoughts on pound USD and dollar CAD. Okay, so a bunch of USD pairs. We'll start with oil and BTC. Then I'll go through some of the USD pairs. So euro dollar, UJ, dollar CAD as well, pound USD. But first we'll go through oil. So oil's, of course, it's been an interesting market. Yeah, very interesting market. I don't trade oil. It's a market which actually let's go. It's a market which I probably will be looking to trade in the future. But I think in this situation, I'm keeping in the future for now because it's not something I'm comfortable trading with just yet. So I don't think this is the time and place to be experimenting. But of course, volatility has been insanely high, especially in these situations. Technical analysis does go down a bit in terms of its viableness, if that makes sense, because you got a lot of fundamental factors. You've always got fundamental factors, of course, but in heightened times, it just becomes a situation with fear and greed, supply and demand, and that could turn very, very quickly based on a certain event that could happen, which you can't foresee. So technical analysis does take a little bit of a hit here. So you're going to have to be a bit more pragmatic, a bit more safe, maybe reduce risk as well, because this is violent. If you don't have a stop loss in place, you could absolutely get damaged here. So I would be a lot more careful with analysis with oil. But in terms of what I'm seeing in terms of price action, overall we're quite bullish, but we have hit a bit of a wall here. I say that because, of course, momentum's picked up very aggressively. We formed this high here. Of course, we gapped to the upside, very aggressive wick to the upside and close back within that candle. And then the next candle stays within this kind of range here. So this kind of area is kind of our box. So we've picked up momentum. Now, this is where buyers and sellers are happy with price to a degree. They can at least agree. So naturally, if you're looking for opportunities, I would be looking either at some longs around here or very, very conservative shorts there. And what I mean by that is just reducing risk, because this could happen again and I don't want to be caught with no stop loss there. So just being very, very pragmatic. But those are the kind of the barriers I'm looking at in terms of where our price action is based around. Dropping to the 4-hour chart. Yeah, price action is very ugly, but it does clear up our interests. This is our area which we want to do business in. So if price was to push back into here, reject well, naturally a nice place for a sell. Now, I wouldn't be looking for this. I'd probably say midpoint is a safe bet, and then maybe this support as a second target. But you want to just play the barriers here. It's not so much, okay, I've got a bias because there's a trend to follow. I don't think that's necessarily true. Again, fundamentals are playing a big part here, and things can change very quickly. But you can clearly see where sellers have done a good job, and that's coming into this area. So this is where you're looking for shorts. And then again, I would segment my targets there. Naturally, I would look for push to support, but I would say that 50% of that range is naturally going to be a safe place for a target. And then, of course, if things go well, you can let things trail. But yeah, that's where I'll look to do business. And then naturally, this is an area where we can flip that bias and look for longs. So yeah, oil, it's just the market which I would be careful with. Yeah, when things are crazy, technical analysis is great because it shows what's repeating through history. But when you get heightened times here, it's just kind of the battle between buyers and sellers. And any event can spark anything really. And because things are volatile as well, you can get punished by it quite badly. Imagine someone short here over the weekend. Even if you had a stop loss here, well, the next available price is there. So it doesn't really matter if you had a stop loss. That position is getting wiped out and you're getting filled at a very, very poor price. So just be careful with oil. Anywho, we'll go through BTC and then we'll take a look at some of the USD majors. A lot of people requesting USD. Yes, we can take a look at the DAX as well. No problem. Hey, appreciate it, Poppy. I hope you're doing well. Yeah, guys, if you're enjoying the stream, please drop a like. It does really help out. Subscribe to the channel as well if you're finding it useful. Hit the bell, all that good stuff. It does really help out, so I do appreciate it. But yeah, BTC is an interesting one. Again, pure consolidation. Yes, we've been bearish for the past few months, actually. But since early Feb, we haven't progressed anywhere. It's been pure sideways. So again, if you're looking to trade pure sideways, you're not looking to follow momentum, you're not looking to take breakouts, or at least undefined breakouts, and you're looking just a short high and buy low. It's all about positioning when you're trading in sideways market. This is naturally the midpoint, more or less. So that's naturally where buyers and sellers are going to be at most equal. and that's going to be an area which is going to attract price. So if you can short high or buy low, this is naturally going to be your safe bet for a target. And of course, if things go well, potentially you can buy low and take a good chunk of your profit there, and then maybe the next chunk there if you see a full push to the opposing side of the range, and exactly what's happening here right now. But yeah, in terms of current price for BTC, well, we've pushed to the higher end of the range again. You can see pure wicks just above this area. We did have a breakout here, but didn't amount to anything. This is what you call a textbook fake out. We've come back to the midpoint of the range. We're now back at the high again. This is naturally a great place for a sell. I even like the wick from yesterday's close. Weekly chart looks horrendous, but naturally it's a great place for a short. It's a great place for a short. Not that it's guaranteed to play out, but it's a smart decision for a short, especially if you can get a stop above the high here. If you want to have a very safe stop loss, you can have it above this high, but that would probably impact your risk reward a little bit too dramatically. So I would just say a stop loss above here. If we're breaking above there, the chances are we're probably going to get a breakout, or at least just some awkward price action, which you don't want to be in the first place. So yeah, really strong rejection there from BTC. I would be favoring a push back to the midpoint in the range there. So in terms of opportunities, if you're not already in the position, maybe you could look for a retest of the level, put some entries around here, stops around there. That looks like maybe a 1 to 2, 1 to 3 back to the midpoint. And then if things go well, you can leave maybe 20, 30% to run just in case we get back to the lows. Who knows? You might see a full swing to the opposing end of the range. But this is just textbook mean reversion, textbook range trading here. We've seen a fake out, return back to reclaim the level, respected it well. That is a short, that makes sense. And if we break out, we'll switch bias. So yeah, I like BTC to the downside. Yeah, I wouldn't bet on a huge continuation. So the midpoint becomes very important just because we've already seen dramatic sell-offs. So I wouldn't bet on another one. Of course, it could happen, but I wouldn't bet on it. And definitely with the signs of exhaustion here, a lot of wicks, yeah, I wouldn't bet on a huge move. But push to midpoint makes sense. Okay, so hopefully that made sense. We can quickly go through a few USD pairs, and I do want to show you guys something. But we'll take a look at, we'll go through dollar CAD first, and we'll take a look at Euro USD as well. So not Euro USD, sorry. We go Euro USD next. In terms of dollar CAD, so I like dollar CAD. I spoke about this one on the weekly analysis. I said I do have a short bias, and I'm looking to see if we can return and play with these wicks down here. Reason being, this is the weekly chart, by the way. Reason being, you can see we just getting alternating candles, blue, red, and then last week's candle was very interesting. Why? Because it had a very bullish start to the week. It cleared all of these highs here, but then by the end of the week, we finished off very aggressively bearish, flipped bearish, and not only broke through support, but closed down there as well. Something we haven't achieved since we started trading down here. Each week's candle was more or less roughly at the same price. This candle said, nope, we're closing below, and it did that with minimal wick to the downside, pretty much no wick. I mean, there might be something if you zoom in, but very, very minimal wick, if any. So that tells me that momentum is firmly with the bears. Now, what would have been nice is if we haven't taken out the low yet of this candle for this week's price action. If we just kind of, because of course we did gap open. If it was still trading in this area, that would be a nice sell back to this low and then maybe back to these lows. But because you've already taken out the low, it does become a little bit awkward. But naturally, the midpoint of this candle, the retest of that support is just naturally a great place for a short. So if you drop to the 4-hour chart, what I would suggest is anything in here is a great place to be looking to sell. If we could push up, maybe take out some early sellers from the week, see if we can reject this area well, and then that becomes your trade back to support. And then maybe if we're lucky, back to these lows. And if we do push up and stay above, then yeah, I would say I'll be careful with that bias. But at the moment, dollar CAD for me is a bearish bias. If we reject these areas, and then the targets, let me just clean up the chart. And then the targets would be if we can reject here, would be that support level, because that's last week's low. And then this would be if things go well. So I wouldn't push for that in one go. So yeah, dollar CAD's pretty bearish to me, but perhaps maybe some upside, because we've tried to sell off a couple of times already this week, but momentum just hasn't persisted. So perhaps we're going to push up first and then drop. But let's wait for that rejection first before confirming. But yeah, I do have a bearish bias for dollar CAD. Euro USD, I spoke about bullish bias coming to the week from last week's analysis over the weekend. It was actually a very nice opportunity. It's just a bit awkward because we gapped down. So again, if you weren't buying London session on Monday, you would have missed the trade, or maybe just entered a little bit later. But again, the thought process for Euro USD was simple. We've had a market that's just been oscillating, fluctuating back and forth. No real consistency at all. And that is itself is a condition, is a signal. And what I can take from that is, if the market is just oscillating, just fluctuating, no real kind of dominant market participant, buyers are not really in control, sellers are not really in control. What that means is, when we do see these big candles, normally you're looking for the fade in the opposite direction. You can see here, really big candle here. What happened? Of course, the next week's candle pushed up, but then it closed very, well, it didn't really close aggressively bearish, but it erased all of that bullish momentum because resistance is holding. And naturally, I'll be looking for a bit of a push to the upside for this week's candle, because again, we had a bearish push down. We've pushed into support. We've had a bit of a rejection there. Nothing crazy, but definitely a rejection that shows support is holding. So I did say coming to the week, we're just looking for a bounce, and we've kind of already seen that. I wouldn't bet on this happening because there's no evidence to support that. I would just bet on a reaction, and we've kind of had that. So I would say the opportunity for this week's price action is kind of over, because me suggesting that would be more of a hopeful wish rather than a logical bet. This made sense. Now this could happen. This could happen. I don't really have a clear bet on what I would expect going into the rest of the week. So yeah, if it was just me looking at this, I'll leave it alone. I've missed the opportunity. This was the opportunity which I would want to trade. And I'm kind of trading it on Aussie dollar, to be honest. So yeah, with euro, it is simply, okay, we've had a big push. We're seeing some rejection at lows. Markets mean reverting. The chances of momentum continuing were slim. As long as we can maintain rejection early in the week, there's a good chance we're going to at least retrace that. Maybe the next half of the week, we might go and break through later on. That's fine, but we can really profit on this leg. Because of course, if you haven't profited from that leg, then I wouldn't try and bet on anything else, because now this becomes 50-50. So yeah, I can't really give too much outlook there on euro. I mean, sure, if we drop to like a 50-minute chart, I can see what price is doing in a little bit more detail. To be fair, this is horrible price action. I wouldn't do much, to be honest. I wouldn't do much at all. Yeah, I mean, maybe you can catch a short there because it looks like we're kind of fatiguing there at the highs, but that's just me kind of making things up as we go along, and that's just not a good way to trade at all. So yeah, for me, the move was at the start of the week. Now I'm trying to see how we close. So yeah, guys, if you haven't seen the recent upload I made on the channel, speaking about our new AI platform, make sure you go check out that video. It goes into a bit more detail, but just if you guys haven't seen it or you're not aware, recently I've launched a new platform, again focusing on AI tools. That's something I've been working on for the past year actually. Focusing on AI tools to help improve traders' decision making and help improve their judgment, because trading is all about just deciding and making good judgment calls. And a good way to improve that is to use AI to improve certain parts which may be lacking, improve certain parts which you can automate, improve certain parts which maybe you're a bit emotional to sometimes. And a great way to do that is to find tools which you can use to systemize things. And one of the tools we just worked on in the platform, which I'll show you guys right now. If you go to elevatingtraders.com, by the way, it's completely free to join. At the moment, it will be paid later, but completely free to use. So if you want to head over, feel free to check it out and use it for yourself. One of the tools we just worked on is recently the alerts tool, which if you have Telegram, this will send alerts directly to your Telegram DM, so directly personally to you. And you create a bunch of alerts here. And something that which I'm using as well, I've used alerts in the past, but one of the conditions we've worked on recently is a new alert system that does full candle patterns. And this is something we're still working on improving, and there'll be more candle patterns you can use. But whenever you're looking at certain signals, certain patterns to form, if prices hit a certain level and you're waiting for an indication to buy or sell, which is how I trade, this is a great alert tool to kind of identify where those opportunities are. So you don't have to be sat at the market watching for how many hours. You can just wait for those alerts to come, because the pattern will show up. And then you don't have to force any trades, because once the alert is there, okay, you know the rules have been met. If they're not met, you're not at your charts. And this will be alerted directly to your DMs as well. But there's many tools that we've been working on here. We've got a strategy builder, which we're working on as well. You got signal opportunities, which we're working on as well. You got the back test, which is something we're working on. So you can automate your back testing. You don't have to go through, hours and hours of scanning through the replay tools on TradingView. You just set your parameters, back test automatically, and it will give you the results, how many trades, win rate, max drawdown, total returns, etc. as well. So just automate those processes. And this way you can go through multiple ideas very quickly too, which going forward is something I'll be working on a lot as well, because I'm a big believer in having multiple strategies and multiple ways to tackle the market. But to do that with just one environment is very, very difficult. So I recommend to go check it out. Again, Elevating Trade is completely free to join. And there's a bunch of AI tools you can work with and experiment with as well. But it will be free. It will be paid later. So make sure you do sign up at the moment, take advantage of it. But yeah, one of the interesting parts of the price action we've seen recently, especially in the USD markets, is just the strength we've seen fundamentally as well. So one of my weakest parts as well, my trading, is my fundamental biases and using that in trading. And that's one way I'm using the platform as well to improve my fundamental bias, because that's something where I do avoid and just focus pure on technicals. Because if you've got a strategy, you focus on the strategy, but it's always good to filter with fundamentals as well. And I've been speaking to the our AI agent, which focuses on technical, focus on fundamental analysis, which is Ori, and this has given me some nice biases for different markets as well, which I'm starting to use to filter some of my trades. So yeah, guys, if you haven't checked it out, feel free to do so. Completely free to join. But anyway, let's go through pound USD. And I did mention my Aussie dollar trade at the start of the stream, but we can quickly recap that as well, because it's pretty much the same trade which we saw on euro and pound, which was, again, we had the wick to the downside, very aggressive wick. Price pushes down to test that support again, and that's the bounce which I'm looking to trade. A good way to view the market is to look for the likely bounce we're going to have based on conditions. Not necessarily how far or where price is going, but what's the likely bounce we're likely to see. And if the market's mean reverting, well, simply where the wicks are on the higher time frames. You can see here on the daily chart, we've got 1, 2, 3, 4, 5 wicks in this area. So if price trades back into that area, what's the chances of us going to see another bounce? Pretty high. It's going to take a lot of energy for us to break through that. Not that we can't, we absolutely can, but it's going to take a lot of energy. So if you can drop to the low time frames and look for signs of rejection early on, this is a great place to position yourself long and put some stops at a safe place. And then you take advantage of the price action for that day. We've already seen that kind of happen this week. So now I wouldn't say there's much of a trade, because now we're coming back into unknown territory. Possibly we might find resistance here. Possibly we might push up. Yeah, I don't really see a clear opportunity. Same with euro as well. And that's kind of why I'm short on Aussie right now too, which we can take a look at in a second. But yeah, someone asked for pound USD, and it's literally the same situation as euro. This was the trade for the week, which made sense to me. Now that we've seen that move, the continuation doesn't make that much sense. Yeah, it doesn't make that much sense in terms of I don't have evidence to say that we are likely to see that move, if that makes sense. We could see the continuation. I just wouldn't bet on it. And we could see price stabilize and roll over. Again, I just wouldn't bet on it as well because I don't really have anything to justify that. So with pound USD already making this move, I think if you're in the lower time frame, same thing with euro, I would just monitor what direction price breaks out, and then drop to the lower time frames and try and bet on a continuation of that breakout. Same thing for euro. If I could type euro USD better, that would make sense. Same thing for euro. We could, break either side. You can also look for some mean reversion plays, which we mentioned earlier. Buy low, sell high, but I'm not a fan. So I'll be very skeptical of that. Poppy, what's up? Had a good February, but it's been tough to trade during all the volatility for me this month. Yeah, I think I'm actually making a video on this topic actually, so do look out for that video. But trading itself is not something of a continuous. You're not going to continuously extract the same amount of pips, the same amount of profit every week, every month, every year even. Trading is all about moments and all about conditions. And if you look through your trading history, you probably find there's certain conditions which you do perform well in, and certain conditions you do perform maybe not necessarily poorly, but not as good as you could do. And one of the best ways to improve your trading is simply identify what those conditions are, define it. Because one of the things that a lot of people do is they identify the conditions, but they don't define it objectively. For example, in terms of volatility conditions, well, there's different volatility tools you can use. You can use the ADX, which shows how expansive the market is relative to recent price action. And give it a name. Give it a name. High volatility conditions, ADX indicator. You can find that on the indicators and trading view. That's also something we're going to develop on our platform as well. And you can set alerts on that indicator too. But when it's at a certain level and price is very expansive, if you know that when price is expansive and highly volatile, you don't perform that well, that's simply just a no trading time, or a time to maybe half risk or even half it again. And just by doing that, you can really improve your P&L in the long run. You don't have to conquer every condition. That's what a lot of people get wrong as well. You don't have to be excellent at high volatility, excellent low volatility. When things are calm and you do well, February wasn't necessarily very calm, but March has definitely kicked off with a bit of a bang. But yeah, if you do well in calmer markets, when things are calm, strike when the iron's hot. When things are not calm, drop back, change strategy, reduce risk, trade less. Protect yourself. You're on the defense, and then when things change back again, back to normal, you switch back up again. And just knowing when to change is a skill and a part of your trading process as well. Because a lot of people have a good strategy, trade, blow up, trade again, and they're not really too sure if the strategy is actually good, but it's actually a good strategy. You're just using it incorrectly. And just by having that kind of awareness, again, that does pay as well. So yeah, I've reduced my lot size. Good, Poppy. That again, it seems very simple. It also seems counterintuitive as well, because you feel like, okay, yeah, if I reduce my lot size, I might not actually. We'll go through the DAX and US30. I might not profit on any winning trades. So when you do reduce risk, you always have that kind of natural thought process of, okay, if I do win the next trade, well, for reduced risk, I'm just not going to make as much. So I won't, get out my drawdown as fast as I want to, which is true. But your profit right now is not your main objective. Your main objective is not lose as much. If you can tick that box, then you start shifting back to profit, and that's when you start to up risk. When things are settled, the probability is back in your favor again. If you're out of tune with the market, if things are not going well, your best defense is reducing risk. Easiest defense, and it also helps with the psychology as well, with your mind. Heavy risk just doesn't hurt as much, and that itself allows you to think a bit better. So yeah, reduce risk, and you can always increase it back up again. And a funny thing as well is you can do the opposite too. When things are going very well, you can increase risk marginally too. So that way, when things are not going well, you're defensive. When things are going well, you're offensive. But again, you don't necessarily, so let's say if you're risking 1% per trade, you're not now risking 5. Maybe you're risking 1.25 or maybe 1.5. Because again, tables can turn very quickly, but at least you're making the most. So you're doing both sides of the coin. But yeah, defensive things are not going well. Anyway, so we'll go through the DAX and I'll take a look at US30. So DAX is interesting. Again, very nice candle here. Start of the week, very aggressive. Again, if you're switched on, great place to buy. Reason being, it's been a historically solid level of support. It's held us in a clean range. Us testing those areas, especially in the bullish indices, is naturally a place to buy. It's a place where I would buy every single time. Of course, I will not win every single trade, but the probabilities are statistically in my favor, especially if we see rejection. I don't trade the DAX, and I probably wouldn't have caught the trade anyway because that was quite a violent wick to be honest. So yeah, I probably wouldn't have caught the trade anyway. But it's just in terms of location, that's really where you want to do your business. So in terms of the DAX now I don't want to do business because we're not in an effective area. The two effective areas for the DAX have been simply on the daily chart, have been simply these two price levels. High of the range, low of the range. This was our breakout. We failed to continue. We came back inside the range, and then we pushed the low. Now we're basically back at the midpoint. So now this is where I would say it's anyone's game, anyone's guess. Sellers could start to see a bit of momentum. Buyers could come into a bit. Technically speaking, I would not look to trade here. Again, maybe very intraday, you might squeeze something. Coming back to resistance, I might find a short-term play there. But again, the play is shorter. You don't have edge over a big period here. You might have a bit of edge short-term intraday for maybe about an hour. And just have that awareness that say, okay, my edge is not looking for a swing trade here. My edge might just be a short-term play on a short-term time frame for the London, for the US session, for whatever, and that's it. Even that you might not see too much success there. I know personally for me in this area, this is one of my weakest areas to trade, so I just stay away. But yeah, if I had to, it would be short. It would be like a 50-minute chart, maybe some shorts to the high once I see some rejection. Excuse me. What's up, the shiny yellow metal? Hope you're doing good. What is up? What is up? Nothing much here. I'm in a couple of positions, Aussie dollar shorts and dollar CHF shorts. I can go through both of them quickly. I did go through them at the start of the stream, but I will quickly go through them again. I'll go through US30 next. Again, if there's any other requests, feel free to drop in the chat. Yes, we'll take a look at pound Aussie as well. Any thoughts on gold after rejecting 52 a few times today? Yeah, I'm only looking for buys for gold. I'm not interested in sells. I know we're kind of struggling a little bit at that level, but again, my time horizon for a trade is ideally maybe 3-4 days. If things go very well, then a week plus. But 3-4 days is kind of how long I look to hold my trade. So I wouldn't look to hold a short for 3-4 days on gold. I would definitely look to hold a long for 3-4 days. Maybe not at current price and current price action, but I would. So I'm waiting for buys more so. But if you're looking for short-term sales for gold, I can see the logic there. We can go through quickly. What I reckon the DAX, DXY. Okay. Yeah, so DAX 1 hour perspective, like I said, I wouldn't trade it, mate. I wouldn't trade it. Maybe something at the highs here. You can look for a short-term play, but I'd probably even drop lower than the hour. The hour would be too long for me because once I get a rejection, then price is probably already trading around here. I've already lost a lot of my edge. My edge is from here to maybe the midpoint. That's my edge there because naturally maybe some buyers take profit. We might see a bit of retracement. That's the edge I take advantage of. I wouldn't be looking for this. It's just not an effective area. So I would drop lower than the hour even. And I'll be looking at the highs there for something. But personally, I would stay away. I just don't think we're in a great place. I'll go for US30 quickly, and I'll take a look at pound Aussie and the DXY. So in terms of US30, so yeah, US30, I like this one. I like the shorts midpoint of last week's price action around here. Very aggressive bearish candle, didn't close particularly well, but naturally a nice place for a sell. And again, short term as well. I want to make sure I emphasize that I'm not looking for this current bullish candle to flip bearish. Absolutely not. It could do, but I'll never bet on that on a bullish indice like the Dow Jones. So this is just a natural place for us to retest and sell. And we've already kind of seen a bulk of the sell. So I would say some of the edges are already erased. Yeah, because now what you're saying is I think that support will break, which is anyone's guess. So naturally for US30, I would say if we can push back to resistance, let's see what we get there. It could be another sell there back into support. Best case scenario, maybe we do break out, but I would look to see if I can take my profits around here, at least a decent chunk, 20, 30% at the very least. And then you can leave the rest to run if we're a bit more confident on that position. But that's where I see opportunity around 4,800, 4,200, back at highs there, roughly midpoint from last week. You can catch a sell there, provided we see some nice rejection. I wouldn't look to sell now. In terms of bullish opportunities, it's just kind of very flat. I wouldn't really look to do too much in here. If we break out, that's interesting, but we come right back into the next obstacle. So I wouldn't be overly bullish straight away. I wouldn't be bearish, but I wouldn't be bullish either. I'll probably say if we start to break through that as well, then yeah, I'm bullish. And then I'll start to look to target these areas as we go up. But it is a bit too soon to speak on that. So yeah, if you're looking at US30 hour chart as well, again, I'd probably drop even lower. 15 maybe, see what we do here, catch a short-term sell, midpoint back there, maybe further. That's what I think makes the most sense. Because again, even time frame, you don't want to limit yourself to, well, you can limit yourself. There's no right or wrong, but you have to be aware of the limitations of each time frame. For example, if I'm looking to take a short from a high here and I take it on the hour chart and I have to wait for an hour candle to justify the trade for an entry, well, that same candle that gives me the price action is going to take some of the edge away from me. For example, if I wait for a bearish candle, a bearish engulfing candle to close here, let's say that's a bearish engulfing candle, you know, if I sell after that, I've already missed all of this edge here. And you don't really have a lot of edge in the range anyway. So you probably want to drop to 15 or even lower so you can take advantage of that candle. So by the time that candle closes, you probably already booked some of your profits, or you potentially can book some of your profits. So I would scale to a lower time frame. If we're looking at a bigger level, let's say, you know, a push, let's say a push back to support here. Well, an hour chart would make a bit more sense. And we could even probably scale to a 4 hour. Why? Because even if you enter here, even a push to the 50%, you can still walk away for decent profit. So yeah, be aware of the limitations of each time frame. I mean, this is not just the hour, it's any time frame. But sometimes it makes sense to drop a little bit lower. Sometimes it makes sense to drop a little bit higher. At the end of the day, it's just a candlestick. But it can eat into your edge if you're not paying attention. Okay, so I'll go through pound Aussie quickly, then we'll take a look at the DXY. So pound Aussie, that's been falling, hasn't it? Has it found support? I haven't really been focusing. No, it's just falling still. Wow. I haven't really been focusing on pound Aussie since we had the breakout because, yeah, it's a move that I would say I've missed. If I'm not in the trade and it's falling this aggressively, I don't want to be now selling at the low, especially on an FX pair. I don't like selling low on an FX pair, especially after such a big move. It's just not a good idea typically. Anywho, we have seen a lot of momentum. We're coming back to some big levels of support. We might start to find support here. I wouldn't be the first buyer to jump into the market. Absolutely not. What's the opportunity? I think the opportunity is already gone for this week anyway. What's your bias on this one? Looking for shorts around 1.89, sell down to 1.865. Okay, let me mark that out quickly. 1.8. Yeah, 1.89. That's there. 1.865. Where is that? That's the low that I marked out, funnily enough. Anyway, so I can see the sense there. But I probably would wait to take that trade next week. The reason I say that because we started off the week up here and we've already seen a pretty big push. Of course, if you just flick to the weekly chart, we probably already used up a good amount of our pips. Every weekly candle is going to give you a certain move for that week. Not a certain as in it has to be this move, but it's going to give you a certain push. I wouldn't keep pushing on that sell because I think we probably used up a good amount of that kind of that momentum for the week. Next week, let's say if we close around here, next week you might start off bullish, test that area, and then start to pull back, and that's your trade there for the next week because we're coming off a fresh week. We can see that fresh movement come into play. We've already seen a lot of selling pressure. I wouldn't necessarily want to keep betting that selling pressure is going to push, especially after such an aggressive move as well. So I'll be careful betting on more weakness. But to be honest, anyway, it probably is a trade that probably won't come around until next week anyway. To be honest, it's already mid Wednesday, maybe Thursday, Friday, we get back up there. So you might not be looking to a trade till Monday even, which I think would be a benefit if that happens. So yeah, I'll probably wait for next week to take that trade and see if we can retrace. Maybe this week we do roll over and go and hit support that too. But if that's the case, I would say the move is already over. That's the move that's kind of missed. I would say it's a bit too late to be selling now. So yeah, if it does retrace, especially into next week, that becomes a smart trade. Because essentially what you're saying is, okay, this week's candles close aggressively bearish, momentum's with the sellers here. If we can retrace maybe to the midpoint of last week's price action, find some resistance, we could see a continuation or at least maybe a push for half of the week. I think that's a smart move. So yeah, I like the idea. I mean, I wouldn't be looking to buy, absolutely not. So my bias would be bearish. And I think next week might be a smarter play, and I think probably won't even retrace till next week anyway. In terms of the DXY, we can wrap up here with the DXY. Some of the DXY again, just in awkward territory. We had some really nice price action. I can't lie about that. Really nice candle there. Look at that piercing wick. Very rarely you see wicks as precise as that. But yeah, lovely wick at the low there. And since then we found support and pushed towards resistance now. So again, you can see with last week's candle, big wick to the upside, probably about 40% of that candle showing that, okay, resistance is holding pretty well here. Going into next week's price action, shorting around those highs, it made sense. Not necessarily that you're banking on this move, but there's a good chance we can react at those levels. Okay, we've already seen the reaction. Now what? Well, I don't really see much now, to be honest. Yeah. I mean, look at the daily chart. Daily chart is interesting. So many wicks around here. So clearly we're struggling at that price point. I would suggest if Thursday was to push back into that, selling around here makes sense as well. Provided we see some nice rejection too, there's a good chance Thursday is going to pull back down too. Yeah, I think any sells in here just makes sense just based on price alone. Let's see if we can push a little bit higher, reject well. Again, doesn't even have to be a push all the way to the opposing range or even down here. Just a push off the high. That's a good bet. Intraday chart. And then you can leave the rest of the position to run as well. But at the moment, it's 50-50 here with the DXY. DXY is respecting support. We might drift higher again. If we do, yeah, I think it's a nice sell. If we start to break lower, I'm just going to play it day by day. If price is not really trading at a clear level or a clear area of significance, I don't want to be too judgmental. I don't want to be too predictive for my bias. I want to play it safe. If price is like at an area of significance, so like a higher low in a trend or the low or high of a range, any of those areas I can be a bit more confident with my bias because I know where we're trading is a significant price point. Right now, we're not really at a significant price point. So I'm always going to be a bit more conservative and I'm not going to push trades as far. If we can get some sells up here, I think that's great. But again, I'm not betting on this. It'll be a push back to support. And then we'll see how far our price goes. So yeah, I'll be careful there. Hey, what's up, CS? Hope you're doing good, man. It has been a while. Good to see you though. I hope you're well. No problem, Shiny. Yellow happy to help. Makes a lot of sense. Yes, maybe we'll burn some late sellers now. Yeah, exactly. Because if you think about it, each week, each day, each time period as well, not just each week, but each day, each hour, it's going to have that certain volume for that hour, certain volume for the full hour, certain volume for the daily, for the week, etc. And we've already seen a lot of volume. Not that we can't still see price keep going. It's just, especially in an FX world where things just mean revert most of the time, you want to be selling high or buying low, typically. And if the week's already had a big move Monday, Tuesday, Wednesday, I'm not going to try and keep betting Thursday, Friday keeps pushing. I'd rather wait for us to find support, maybe next week push up a bit, and then try and catch the highs of next week on a pullback. And I think logically that makes a lot more sense there as well. Okay. I can take it. We can finish up in euro. To be honest, there's not much to say. To be honest, I don't really have a plan. I mean, I did have a plan, but the plan's already happened. So, because each week's price action, every time I do a weekly analysis, every time I come into the week, I have a map, I have a play that I'm expecting for that week. If there is a play, sometimes I don't have a bias, but for euro, I had a bullish bias simply because we had a very aggressive bearish move back into support. We saw a really aggressive wick because we're mean reverting and not really seeing any sustained momentum. There's a good chance that we're going to have a bit of a push to the upside, at least the first half of the week. Maybe we push all the way to the opposing side. I have no idea, but there's a good chance that price does find, excuse me, does find support and has a bit of a push higher. So now that we've kind of already seen that push, which was this move here, we gapped down and had the push. Now that's kind of me done for my analysis for the week, because now it's kind of just anyone's bet. We are consolidating. We might break lower again. We might break higher. I wouldn't be so confident either way, and that's just the truth. So yeah, euro, I don't really have too much to say. If you're looking for some short-term trades, perhaps breakouts of this range become interesting intraday. So maybe if we break out, scaling to like a lower time frame, 15-5 minute, maybe tomorrow, London session, that could be a nice little short, or New York session, likewise on the highs as well. But that's about it. That's where I really see opportunities. This was a nice move. Now it's kind of just 50-50 which way. So yeah, I'll keep an eye on the range. Depending which we break out, I see opportunity. Otherwise, I'm waiting for us to finish this week's price action, reset, see how this week's candle close, see how the next couple of days candle close as well. Because at the moment, all I'm seeing is just a bunch of wicks here. So this is really where we're struggling. So I want to see if Thursday, Friday keeps that momentum up, or does it reject it again? If it does that again going into next week, then next week I'll be looking for another bounce. But yeah, I don't know the answer to that just yet. So yeah, intraday could be some short-term plays, but I'm personally waiting to reset again for next week. Anyway, guys, we have come up to the end of the stream. I hope you have found it useful. As I mentioned early on, if you haven't checked out our new AI platform, Elevating Traders, make sure you go check it out. Again, completely free to join, to use at the moment. It will be paid later, but to celebrate the launch, everything is completely free to use. If you're looking for alerts, if you're looking for trade ideas, if you're looking for expert AI agents to research ideas, research technicals, research fundamentals, a great place to start. You can back test opportunities as well. You can build your own strategies too. I'm personally looking to build some indicators to help streamline my trading process, because certain candles, certain patterns that I look for, which I do manually with my eyes, but using indicators specifically for it, especially something that you want as well, because you might not find the indicator on TradingView or a different platform, but you have that own vision. You can create that own indicator as well. So that's something I'm very, very excited to use. So yeah, completely free to join. Just visit elevatingtraders.com. There's a link in my description as well. And then you can have access to the Telegram as well, which you can chat with AI agents, and you can find trade ideas as well. So if you're interested, check it out. But guys, really appreciate you tuning in. I will be live again on Nick's stream tomorrow. So head over to his channel tomorrow. On his channel, you can't miss it. Just type Trading Nick, you'll find it. I'll be live with him as well. But yeah, guys, if you have found today's stream useful, please drop a like before you leave, subscribe to the channel, share it with your friends, hit the bell as well. Does really help out. But yeah, thanks, guys. Appreciate you tuning in. Have a good day, and of course, I'll catch you on the next one. Take care.